Well, I would say that the July number indeed look pretty weak. But given that we already saw the MLF rate cut a few minutes earlier, I guess that was no surprise to anyone. I think the PBOC is already shifting away from the mentality, well, of, even if we cut by 15 basis points, what good is that going to do, right? Is that going to make a huge difference? To right now, more like, well, we'd better do something. Otherwise, it keep getting worse, and it shows that we're actually in action, and then we could be blamed for that. So we think that the central bank mentality has shifted clearly since the previous cut, and now they're being more responsive.
Are we starting to see the signs that maybe the weakness in the property sector is now starting to hit consumption and actually dragging down consumption with it?
Yes, indeed. Well, we look at the consumption numbers. Well, not exactly the consumption number, but the retail sales. Retail sales, however, has a catch in it, which is it is a retail sales of consumer goods. It doesn't necessarily include enough services. Actually, back in July, I do think that the consumer services were booming. Look at the box office at an all-time record high. Right. Look at the transportation, accommodation. That was okay. But consumer product sales probably were not doing very well. Not to mention that compounded by the fact that this is a nominal series and your CPI inflation was really low. So that probably contributed to a low number.
When do the measures announced from the Politburo meeting, when do they start to kick in and show up in the numbers? I mean, how many months are we talking here, or weeks?
Well, in theory, we should be seeing them now. I would say that the Politburo meeting has effectively lit the hope for the market that something can be done and can be done relatively soon. I would say that they could have started with something easier, such as interest rate cut. They're starting from now, and probably some adjustment in the property market. For example, the HPR and also the restriction to mortgages. HPR being the housing purchase restrictions, that doesn't cost anything for them to remove that, right? So that should be the first step, together with the restrictions on mortgages. I think we're hearing news that second-tier cities are starting to do it.
There are reporting that they could be moving some of the debt that we're seeing at local government level to provincial. I mean, is that a sizable move, you think, in some ways, of how they resolve the debt issues?
That's a great point. Actually, we think that is probably the most important point that they have mentioned during that the Politburo meeting. Because before the Politburo meeting, most people would say, oh, it's a long-term problem, and because of the potential moral hazard issues that this could ensue, nobody should be bailed out, and the central government should not do anything. That was before Politburo. But when they saw it in the readout, people suddenly realized that these top decision makers saw the problem and they're about to address it. The comprehensive package, 一揽子计划, basically means that you do not have a one-cut-fits-all kind of one-size-fits-all kind of cookie-cut approach. You need probably different kind of things to address LGIV debt and the publicly traded debt, off-balance sheet stuff, trust loans and commercial bank loans. So we are waiting for more of such indications to come out.
So what does that do specifically when you move some of the high-risk LGFB debt to provincial governments? I think they're going to issue bonds then to then fund some of that debt. What does that do in terms of unlocking? Is it growth capacity? Is it infrastructure spending? And what does that? Because they're also transferring the load also. It's almost like a debt swap. What does that also do as far as the debt loads for provincial governments?
What it's trying to do is that at the point when the household sector as well as the private sectors are lack of confidence to lever up and invest, we need the public sector to invest, right?
Okay.
They need to lever up. So where do they get the money? Apparently for local government and LGIVs, which are loaded with debt already, it is very difficult to borrow more and compound into the already very high debt servicing cost. And therefore, two things need to be done. Number one is to restructure the current debt stock, mainly to extend the maturity and lower the interest rate. And the number two is to create a new channel for them to borrow, hopefully by leveraging on the central government's balance sheet, not local governments anymore, so that they can borrow and then, invest as soon as possible to create jobs. So that's what needs to be done. We think the direction is pretty clear. Proposals have been submitted to the top decision makers already, and therefore we think it's probably in the brewing at the moment.